Good evening, good evening, good evening. Today is June 2nd, 2023, and half of the year is already over. The year is going by very fast, and a part of me likes it, part of me doesn't like it. I want to enjoy every moment of my life, and I want time to move slowly, but it's moving quickly, so it's important to remember not to waste your time, to make the most out of your days, and to live well. Now, so before I go off on a spiel or go off on another tangent on the importance of time and all of that, I want to jump in to what you really want to hear. I want to go over the video of the day. Now, today I want to go over the pre-market, the importance of the pre-market, and how it can help your trading. So, safe to say that the first couple hours of market open, there's a lot of movement in the first couple of hours. Now, there's a lot of movement within the first 45 minutes of the market open. Now, there might be traders out there who recommend do not trade before 10 o'clock. Here's 10 o'clock in the market, as we can see over here. If you didn't trade before 10, that would be fine. Got into this trade, longed it. This is for today, Tesla. Got into it at 211, held on to it until 217. It's a lot of money. If you have one contract, $600, two, 1,200. But that's besides the point. What we're gonna go over is the pre-market. A lot of people actually make money, and they trade in the very beginning of the day because they might have other things going on for them later on. Take for example, if you live in California, the stock market opens at 6:30. Trade until 8, 9. You have the rest of the day to yourself. In New York, it opens at 9. People have other obligations, and they might not have the ability to look at the screen the entire day. If they don't have the ability to look at the screen the entire day, then they might swing trade. But a lot of people trade in the beginning of the day, the very, very beginning. So what I'm going to go over is just this section right here. We're going to go over support and resistance levels, or supply and demand levels. Support and resistance right here. As we can see, the price touches this level, 211, around 211, 211.04, somewhere around there, that price. It hits it once, twice, almost 3 times. So we realize that this is a consistent level that the price is hitting. If it breaks through this level, we usually want to buy. If it breaks below our support level, support seems to be about 209, 210. Well, let's say 209. So right around here, 209.85, right around there. Hits it once, twice. Well, actually, once, twice, 3, 4, 5, almost 6, 7, 8. It hits it many times. And as we can see over here, it's a little bit of a false breakout in the very, very beginning. Now, the market can be tricky. So when it comes to entering into these trades, let's say that you thought that it hit this level, and then this little area over here, you decide to get into a sell, or a put, or a short trade, and only to realize that it goes up and it goes in the opposite direction. This is where cutting your loss as quickly comes into play, and this is also where realizing that the market and candlesticks do this. It might not hit the exact level, but it will hit very close to that area. Take for example this candlestick right here. The price hit 209.84 multiple times. 1, 2 over here. 1, 2, 3, 4, 5, 6. But the price hit 109.95, which is just 10 cents off once. So that could be, it does the same when it pretends to break through, causing some people to sell, causing those people who decided to sell to lose their money. So it's a good idea not to just rush into anything, to have a little bit of patience, wait a little bit longer, and then get in. So over here, based off of these levels, if it broke below this level, I would have shorted it and sold. If it broke above this level, which it did, then I would have bought. So I would have got into this trade maybe right around here. It went up, it went down, retested the level, and then went back up. Now, if you realize that it's going down, you can always get out of the trade, take your profit, close the trade, that's it, and then re-enter once it goes back up. But you don't know what the market is going to do. So, I would recommend just taking some time, paper trading, and watching how the market moves. Watching how price moves. Getting accustomed to that. Understanding the nature of the market. And as I said over here, how the price doesn't always hit that level, I can show you another example of it. Let me just scroll through on the same chart and find another level. Okay, so over here, see this level over here. Yeah. So if we see this level over here, wait a second. It's at once, 2 times, 3 times, and then over here, it goes in and out. It fakes going low. I mean, ultimately it did go down, but it went back up, and this could have faked many people out. This could have caused many people to enter into a short, only to close their trade quickly because they thought that it might be a reversal. The market can be very tricky like that. So, in periods of trickery or in periods of uncertainty, it's important just to have patience and to remember sometimes trading less is better, and that it's not all about just making a ton of money. It's about mastering the skill set. It's about knowing how to do this effectively. If I look at this chart right now, we're not gonna do trend lines. We're not gonna do any of that right now. We're just gonna stick to the support and the resistance levels, or the supply and demand levels, as people call it. So over here, that's another one. It hit this level. 1, it went a little bit above. Over here, 2, 3, 4, 5. Hit that level 5 times over here. Now, that was the high of the day. And if it broke that level, then I would have entered into a long. So, to clarify even further, look at this over here. Just this section right here. As we can see, right here, we're looking at this right here. This level, right around here. The price stays within this. If it broke above this level, I would have entered into a long. If it broke this level, which it kind of did, but this is a period of consolidation, it broke it right around here, entered into a short. That way you can trade effectively. Now, would I recommend getting into many trades per day? No. The less you trade, the better. Trading, in fact, is a little bit boring. It takes time. So, back to what I was saying. I had to pause the video for a second. Back to what I was saying about these trades. Understanding these levels, they're very, very important. We can see that it hits this level many, many times. Over here, the price stays within this range, and then it breaks through either to the downside or to the upside. In this case, it breaks to the downside, getting into the short at 115.35, holding on to it until the turnaround. It's probably about $1. Dollar doesn't seem like much, but with one option contract, that's about 100. So it is something, and depending on what you trade, how much you trade, you could definitely make more. So a lot of traders suggest trading with precision, not just entering in and out of trades. The more you trade, the more likely you are to give back your profits. So be careful how you trade. Take your time. Remember to learn, and then to scale up slowly. By scaling up slowly, I mean starting off with one share, moving that one share and risking pennies to 10 shares, going from 10 shares to 20 to 30 to 40 to 50, and so on and so forth. Take your time and learn the skill, not just focusing on the money. Focusing on the money isn't going to get you anywhere. Focusing on the skill set will make you profitable.